Alphabet, Altria, and the ADP report all making headlines today. I'm Lisa Bernhard with Reuters, and joining me is Chris Carey, portfolio manager at Carnegie Investment Counsel, to talk about the three A's. Let's get started with the ADP employment report, Chris, which showed private payrolls increasing less than expected in November and wage gains are cooling. So why are we not seeing much movement in stocks today, given that the economy is really heading to where the Fed wants it to?
That's a great question, Lisa. Thank you very much for having me. I think the main reason that there's been a bit of a muted reaction today, despite what we would consider a positive number, is primarily down to the fact that NFP is on Friday, and that is what markets are watching for. We saw in the October release that we had a much better number than expected, and I think that was mainly one of the bigger drivers that has caused the recent rally that we've seen this quarter. I think that if we continue to get another number below 200,000, that's going to come right before the Fed's meeting, the final meeting for the year. I think the market is expecting that we will see a third hold in terms of what the FOMC is planning to do. But until then, I think the market is just waiting with bated breath to see what that report will show and how that will dictate Fed policy at the next meeting.
You mentioned NFP is Friday, which of course is non-farm payrolls, just in case there's anybody wondering out there what that is, which is otherwise known as the jobs report. All right, let's talk about oil now, which dropped to below $70 a barrel today, and that's weighing on energy stocks. Explain to us the demand concerns and how that is dropping the price.
Sure. I think it's actually both a demand and a little bit of a supply concern as well. On the demand side, it's primarily being brought out by fears that China's economy is weakening, that the growth is starting to moderate. We've already seen record youth employment in the country as well. And then on the supply side too, we have the fact that there's a number of non-OPEC members, such as the United States, that is producing quite a lot of oil, and it's being fought against by the OPEC Plus group, who have already been promising supply cuts of around 2.2 million barrels a day in the first quarter of 2024, but that's still putting a significant amount of pressure on WTI, which I think now is at around $69 a barrel. So we're definitely starting to see a bit of pressure there, and the amount of supply that the US is coming out with is putting a bit of a ceiling on oil prices.
Great. Let's go to company news now. And British American Tobacco is grabbing headlines today for a $31.5 billion write-down on some of its U.S. cigarette brands that it owns. Its shares in London fell at one point to their lowest level since September 2010, and that is weighing on its rivals Altria and on Philip Morris. So do you think that this is a tipping point for these tobacco stocks?
It's definitely something to be aware of as an investor, that these companies are continuously struggling to innovate against a wave of increasing regulation in the United States. These companies also have rather large dividends that they're paying out to their investors, what makes them attractive, so to speak. But with so much cash flows going out the door towards investors, and their R&D is struggling, it's kind of not a surprise that this is the direction that the industry is taking. It's really not probably the best area of the market to be invested in.
Okay, let's switch to tech now. And we saw today that Alphabet came out with Gemini, its latest AI model. The stock was down fractionally at last check. So why the muted investor response? I know you're a tech guy. I know you like tech stocks. So explain why the investor response is so muted. And to somebody like you who likes tech stocks, I mean, how closely do you follow these moves when we're really in this escalating AI battle?
I think we're definitely just in the first steps, the first wave of AI and AI technology enhancing our lives and being able to make us more productive. But the key reason why I think that Alphabet hasn't really moved today on this announcement is down to the one key word that is on the mind of all investors, which is monetization. How is Alphabet going to be able to successfully monetize Gemini and their AI products? We've seen the experimental rollout of the generative search, where you essentially get not just your typical Google results, they're there on the page, but you get a artificially generated summary with some follow-on links and follow-on questions. You're able to ask them that. But the real question is how they're going to be able to monetize that. What they've definitely done today is been able to show that they're a formidable competitor to Bing and what they're trying to do. Microsoft's trying to do with ChatGPT and make that more of a rival. But I think it's also important to remember that this is something that Alphabet has been doing for years and decades. They are definitely one of the forefront leaders in AI. I think that they're going to figure this out. If you're able to use Bard, which is the chatbot equivalent of Google's from ChatGPT, that's being now powered by Gemini, and the results that they're able to come out with are really, really impressive, especially when you're querying data that's within Google Cloud Platform. So I think investors want to see how can this be monetized, not only on the search side, as well as within the Google Cloud product family.